Yeah, the Jake Miller coming in.
Are you telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a deferred sales trust.
A real eye opener to see that there are ways that people can use the regulatory framework, if properly structured, to invest 1031 exchange dollars in things that you would not think were like kind to what they exited from. So it was very impressive. I got to say, you are the first one I've seen pull this off, and I'm pretty hesitant to believe in a lot of these kinds of things. So it's a major feat for me to say, wow, this actually really worked, and it was really cool.
1031 is a way to shelter your income when you sell the thing. The DST is a way to avoid the 1031 and not have to suffer the time penalty.
Our career and during different tax periods, we've seen, these tax avoidance, tax minimization, offshore, all these different strategies undertaken to minimize or avoid taxes. And then I can tell you that, some of them are just not worth the trouble. And so I was skeptical. Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transaction. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The Deferred Sales Trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
Hello, everybody. What's going on? Welcome to another Capital Gains Tax Solutions Masterclass on the Deferred Sales Trust, trying to make the Deferred Sales Trust simple. We are here to help you or your clients defer capital gains tax using the Deferred Sales Trust and or exploring other options that might be a good fit. Part of Capital Gains Tax Solutions focus is just to lay out clear options for everybody. We believe the problem is most high net worth individuals and those who help them, they really just struggle with clarifying what the options are. And they struggle with executing on these strategies in a timely fashion because a lot of deals are, closing in 30 days. Sometimes people don't have the time to plan, or sometimes they're learning about us, last minute. It seems like that's what we've been seeing here even recently towards the end of the year is a big push to close deals. In fact, I think we're closing about 8 this month alone. So we have a lot of deal close stories happening right now. We're in the midst of it. And, we really believe that everyone needs a, kind of like capital gains tax solutions, team, because it's not just about cash flow, it's about tax flow. And if you don't have a tax flow team with you ready to go to help you execute, guess what? The government is waiting for you to pay down their $31 trillion. And it's not an easy feat, and it's going to take a lot of good taxpayers to do that. Now, we do believe that these tax deferral strategies actually create more tax revenue and ultimately will help grow the economy and give more tax dollars to the U.S. government. And that's part of why it actually works and it's legal if you do it properly. But if you don't have the team and you don't set it up prior to, you lose, right? And that's really why we want to be here right now to make it simple for you, to clarify if it's legal, how it works, and why it might be a great fit for you. Or maybe not, right? I mean, half our conversations are simply telling people maybe why it doesn't work and why it's probably not a good fit based upon their circumstance. And so our goal is to just share our experiences, to document our journey, and to invite you to be a part of our community so you can help yourself or your clients create and preserve more wealth. That being said, I am joined by some amazing strategic alliances, and they are with me as a way to help execute on this deferred sales trust. First one being Jake Miller. He is a certified financial planner. He's the financial advisor, and he's an expert in all things investing, really. Jake Miller, how you doing? If you can hear me still. He might be frozen. Looks like he might be. We'll let him come back here in a minute. I do see him. Wait, here he is. Jake, are you still there?
I have a lull in my internet, but I'm back. So happy to be here. Glad to be calling in from Mazatlan, Mexico, where we have some clients right now with their deferred sales trust, as well as with other investments looking to syndicate, looking to do joint venture and get some higher returns, acknowledging that there is higher risk going out of country. And so just some fun things that we do for those clients when it's appropriate, when they ask for it, when they meet the requirements. And it's fun and it's exciting, and I have great weather and a great office for today.
Excellent. Yeah. Jake and I were just in Mexico together at Los Cabos. We did a workshop one-on-one, there's about 15 or so high net worth and purpose-driven investors, entrepreneurs. So we were able to do some coaching and some training on the deferred sales trust and investing and planning. And so that was really cool. Jake just flew back over to Mazatlan, and then I flew back to Taxifornia, where I reside right now. We're also joined by Pierce York. He helps to co-host the podcast. He's a Newport Beach commercial real estate and luxury real estate specialist. Pierce, how are we doing today, brother?
I'm doing awesome, man. We had a great call this morning with Jake and a potential good lead for us. So excited about that. It's been a good day.
Excellent. We also got Rebecca Munson. She's in the house, and she's our luxury specialist and real estate specialist up in the Lake Tahoe, Truckee area. Rebecca, how you doing?
I'm doing great.
Phenomenal. All right. So let's get started. We really cover three things, kind of the vision. We talked about that kind of already. And then we cover deal stories, right? And then frequently asked questions. There are things or objections that are coming up. And then we open up for questions for anyone. It could be a live deal. It could be a potential deal. It could be a deal for your client. And we open up for questions. And so Jake and Pierce, I'd like to walk through a deal this week, right? This is a scenario where a gentleman, in fact, Jake and I met a daughter of a gentleman who was selling or potentially selling some assets in the Northeast region, some convenience stores, some gas stations with some brothers. And this is the classic example, Jake, of kind of like running out of time, right? Not even knowing about it. In fact, they wouldn't have known about it if Jake and I weren't at this real estate kind of mini summit speaking on the deferred sales trust. But it came up, Jake, and then, jumping on calls, trying to get things moving, but running out of time, or it's just too much. So this is a common thing, Jake, right? Where people are running out of time. But walk us through, Jake, if someone's in that shoe where they built a business for 10, 20, 30 years, and they're going, Jake, like, this seems like I would have already known about it. It seems like it's too good to be true. And man, am I really going to be sending millions of dollars to, a financial institution with people that I have never met before and a trustee that I've never met before? Walk us through, Jake, how you would handle that objection.
Absolutely. And Brett, you bring up a very good question.
See if his internet is going to cooperate with that. It's probably frozen out. I'm going to answer that objection now since Jake is frozen out. So I did my best I could, right, with this gentleman. And I mean, it's not over until it's over, but it's set to close like next week. And so he's just like, man, I'm still working. I'm still trying to retire. I talked to my CPA, and they throw up a couple objections, and I'm like, well, can you get your CPA on the phone? And so that's the first thing I want to kind of encourage everybody, whether this is for yourself or for a client, is to not to try to overcome the objection by it's called the telephone game, right? The client speaks with us, and then they go speak with the CPA, and essentially then they come back and they say what the CPA said, and it becomes this telephone of what they think we said, and what the CPA think he's hearing, and or when they do a rough Google search, right? And they search something and they find a blog post about why this can't work, right? It's too good to be true. Essentially, they're looking for evidence to prove why they can just dismiss this and just pay millions of tax, because it's emotionally, it's a lot to take in. And if it's true that it actually works and their people don't know about it, it's almost like, and they're running out of time, it's almost like I'd rather it not even be true or even work, or there's some reason why, so that after I pay these millions of dollars of tax, then I don't even have to think about it, right? Because that thing was way too good to be true, right? It didn't really work. And so I found that as I was talking with him, I was just thinking, nothing matters in what I'm saying right now unless he actually has his CPA come on the phone. Unless he has that trusted advisor with him asking the questions directly to our team and myself, and the client listening, being right there, so he can see the discourse. In fact, that's how most of our deals actually happen. People are coming to us for the first time, and then they're bringing their trusted professionals in. But we have a long runway, ideally 30, 60, 90 days, 100 days, a year before closing. In fact, just closed the deal yesterday. This was a land deal out in Georgia. Worked on it for about 2 years. Part of it's because it got stalled multiple times. With land deals always take longer than most deals, but 2 years of due diligence and questions and meetings and extensive time and energy spent, and now it closed. But guess what? When we have more time, we're able to digest, and that's the biggest thing. Most people, if you are not planning now or not attending these types of masterminds with us and getting to know us, like us, and trust us, and have your CPA, your financial advisors, your whoever the people are going to have the big questions, the commercial real estate agents, the tax attorneys, the M&A advisors, time squeezes the ability for you to digest what the evidence is and how it works and why it's a good fit for you. And that's the worst part about it. So Jake, let's see if your internet's going to cooperate here. You were about to answer something brilliant, but but you went out.
So let's try my Skyrim, which is a mobile internet device, which also does the same thing. And that fails, I have one more option. So let's see how this.
Jake, you sound like a robot. You do sound like a robot. You sound like a transformer right now, like Transformer from Mazalon. So either I would say maybe black out your screen so we can't see your video. Maybe it helps the bandwidth, or perhaps just wave. But Pierce, let me throw it at Pierce for a second. See what Pierce thinks about that. Pierce, what are your thoughts on anything I just said, or questions or comments?
Yeah, so there's a variety of reasons why, I have come across or objections from the CPAs, financial advisors, right? And the big ones is you gotta kind of understand where they're coming from. I mean, if you throw something like this at them and they're like, well, first of all, like, there's probably an embarrassment factor, because they're like, why didn't I know about this? Like, I'm supposed to be the trusted advisor. Like, I didn't know about this, and I should have. It's almost like doing a disservice to the client, right? Like, maybe I'm not good enough. Number two, they have super high risk with like really low upside, because if they just say yes to something and it backfires, like, that client is going right back to their trusted advisor and is being like, you told me this was okay, it wasn't. And so and at the end of the day, right, there's a possibility in their mind, right, that, well, this guy's going to take my client. So not only am I risking it all, I have no upside, they're trying to take my client, and I look like an idiot. Like, why would I say yes to this at all? The problem is it's true, right? And so the fact that they don't know about it means they need to educate themselves on it, because it really can help their client. But really, they need to get to know, like, and trust us, and realize we're not trying to step on their toes, take away their clients. We're here to come alongside, stay in our lane, but enhance them, and bring them in part of the team. And so it's really kind of getting them to get on and take the journey with you, because the telephone game sucks, because they don't know, they've never heard it before. Like, how are you supposed to take something that you've never heard before, this abstract concept? You have somebody who thinks they know what they're talking about because they have a decent idea of a bunch of different, concepts within this financial space. They think they know all the stuff, and they go back and they say, well, California is not going to allow that. Their franchise tax board is not going to allow that. I read this article from a qualified intermediary. Well, duh. Like, what they are like, there's no reason for them to want this. It's just eating their business, and I can't blame them, because I wouldn't want it, right? Like, I wouldn't want it to be true. If I didn't know and wasn't aligned with you guys, like, would I want this to be true? Probably not.
You nailed it, Pierce. I think that was so well said. That was amazing. I love the way you put that out, and the way you laid that out. The first thing is, you can't even understand what they're saying if you don't have them on the line, right? And so part of this, there's a book called Never Split the Difference. It's by Chris Voss. He's an FBI negotiator. He was, and now he coaches and trains, teams and really all communicators. And there's a thing called mirroring and labeling, right? But essentially it's like active listening. So when they bring up, for example, I read this blog post with the California Franchise Tax Board had a notice to qualified intermediaries that the Deferred Sales Trust is illegal in California. We get this every day. By the way, I just got this. This is so funny you bring it up, Pierce. I got this 15 minutes ago from somebody who lives in California, who's selling a business. And he just brought his financial advice, potentially his financial advisor brought it in. They're looking at it, they're researching together. And he's going, we found, we're looking at this thing and we're concerned. And it's like, well, let's walk through that. Like, what are your concerns? So the first thing you always want to make sure is you ask, and you don't try to overcome an objection without first understanding really what they are objecting to. And so the way you can do that is by asking them or paraphrasing what they just said. So if they say something along the lines of, yeah, I think it's too good to be true. And you say, too good to be true? And you pause and you see, and you try to hopefully invite them to talk more about that. Yeah, I mean, I just read this notice about California Franchise Tax Board saying it's not legal in California. Oh, tell me more about that. Not legal in California? Yeah, here's the notice. In fact, I actually, this is funny. I actually prepared this. I got it on my screen here. I'm actually going to share the notice. We get this so often that I think it's very important that we literally show everybody what this is, because it's funny because people come to us like, have you heard? I was like, yeah, we heard about that back in 2019 when it happened, right? It happens on every single one. So this is the actual notice, everybody. You ready? This is the actual notice. And this is from the California Franchise Tax Board. And it says subject. And it's a notice, and this was sent out to qualified intermediaries. So first of all, notice that it wasn't sent to investors. It wasn't sent to business owners. It wasn't sent to crypto owners. It was sent to qualified intermediaries. Remember, for a 1031 exchange, to even qualify for a 1031 exchange, you have to have an investment property, right? Investment property. So it says imposing failure to withhold penalty against qualified intermediaries who actively participate in certain improper like-kind exchange transactions. Okay, so Pierce, notice what they're saying here: imposing a failure to withhold. So California has a thing called withholding. It's typically 3 to 30% when the funds that are owed to California or due to California. And that withholding, by the way, we always participate. And meaning we always have all of our deferred sales trust transactions, if they're in California, they have, or any place that has withholding for that matter, are going to be sent to the state agency. So that's part of why we have a perfect track record, thousands of closes, billions under management, most deals done in California, and not a single negative result. Okay. And so they're talking about imposing a failure to withhold. So the question is, are we withholding? The answer is always. Okay. All right, great. Number 2, it says the purpose of this notice is to inform qualified intermediaries that the Franchise Tax Board will impose failure to withhold penalties against QIs who actively participate in structures where boot or proceeds from an attempted like-kind exchange are converted into an installment note or similar arrangement in which payments are to be paid back over 2 or more years. So again, first thing is, did you withhold, right? Yeah, we withheld. Okay, so got it. So if you've already paid with California, this is not the IRS. This is California. This is not the entire Internal Revenue Code, which, by the way, the installment sale is based upon IRC 453, which is a federal tax code. It's not a California tax code. Okay, so they're talking about California withholding. They're not talking about whether or not the federal IRS doctrine of 453 actually works. In fact, if you go down, this says number 2, it says California conforms to IRC section 453 pursuant to the Revenue and Tax Code section. Basically, it's saying it agrees and conforms to the federal doctrine of IRC section 453, right? So this is not saying that 453 does not work. It is not saying that they don't conform to it or they don't recognize 453. It's simply stating that if you're going to not withhold what's due to California, which they're absolutely correct, then there's a problem and we're going to impose penalties. Okay. So watch what this blogger does. This is a blogger. Okay. And they're an exchange company. Look where he takes us. And also, by the way, did you notice, Pierce or Rebecca, did they say anything about Deferred Sales Trust, right? In fact, let's search Deferred Sales Trust. Deferred. Okay, it's deferral. Okay, deferral. Anything about deferred or deferred like exchange? Is anything about Deferred Sales Trust? In fact, deferred. There's not even Deferred Sales Trust in there. Is there even a DST in there? No DST. But watch what this blogger does, and we call this the drive-by media, or really, it's their opinion and their interpretation of something that, like Pierce said, we don't think they wanted to think it could be true. It says the California Franchise Tax Board has officially put that 1031 exchange qualifies intermediaries on notice that FTP intends to assess failure to withhold penalties against qualified intermediaries when certain tax deferral installment strategies are used to save a failed 1031 exchange transaction. Okay. And he goes on, and guess what this guy uses? He goes on and he says, these tax deferred installment sale transactions have been promoted under various names over the years, including private annuity trust, deferred sales trust. So all of a sudden he's imposing the deferred sales trust into this notice, his interpretation of this, right? And essentially now he's saying that these deferred sales trusts, you got to be really, really, really cautious. And so what people do is they take this and they think that, oh my gosh, this thing must not be legitimate. It must not be real. It must not be legal, right? They take this step of they're jumping, right? They're jumping to this big conclusion when it's all just about withholding, right? So this is the most common thing. The other thing is, or first I want to pause there. Pierce, any questions or thoughts on that? Or
Yeah.
Rebecca, even you too, after that.
Brett, can you dive into the definition of withholding and what they mean here?
Yeah. So, I mean, by the way, if you look up FTB withholding 1031 exchange. Okay. So if we look this up, so essentially California has a 3 1/3 of like basically tax that's owed to them. Okay. That they're due to them. And we think what happened was certain groups were not withholding that and they were sending it all into like an installment like structure. And when they did that 3 1/3 that was due to them, California wasn't getting. And so they're saying, hey, Mr. Qualified Intermediary, do not cooperate. And we're going to put you on notice that if you cooperate with these things, this is not okay. What is owed to us is owed to us. But basically it's a 3 1/3% tax on the gain, right? 3 1/3 tax on California sold properties, right? So let's see if it pumps up here. Here we go.
Is this the transfer tax?
California withholding tax on sale of real property. Yeah. What is the California law for withholding on the sale of California real property? Buyers should withhold 3 1/3% of the gross sales price on the California real property interest from both individuals, natural persons, corporations, trust, pay the amount to the Franchise Tax Board, and pay this amount to the Franchise Tax Board. However, most sellers qualify for an exemption, meaning that usually no California withholding is required. And so you can read this whole thing. I'll put it in the chat here. Okay. And you can check it all out. But that is what's due. And that's the thing that's what we've always followed. That's also why multiple California audits have happened. No changes, no findings. So this is a
couple of
go ahead.
questions.
Yeah.
So it says it's real property. So if you're selling a business, I don't know if, I know residential real estate, a little bit of commercial real estate, but if you're selling a business, that's not real property. So
exactly. Right. So
Okay.
so if there's no 1031, in
Right.
fact, one of the clients we're working with right now, he's selling a business in California. So I replied to him real quickly. I said, hey, this doesn't even apply to you. And I'll explain to you later why, but you're not even in a 1031 exchange.
Right.
Right. And so, but people's minds, if they just take this and they just go, oh my gosh, like, oh, I don't want to get in trouble. It seems too good to be true. I read this thing on the blog. It's like, hey, you're not even a 1031. You're selling a business. So it doesn't even apply to you. Number two, if you're selling a primary home, it doesn't even apply to you. Right.
Yeah, that was my second question because I know
you're,
that
you're
that's
selling a
an
primary home. You
exemption,
can't even do a 1031. So like this is by default, you have to be at a qualified intermediary. Number three, we have a qualified intermediary in California. They've been doing it for 25 years. They're amazing. They're like one of the best in the entire, I think the entire country, what they do. And you think that their attorneys would say, would have a problem, right? And say, oh my gosh, this blocks us. No, they were like, no, we withhold. So there's no problem. So there's just so many things here where you just go, oh my gosh. And so this is what we battle every day. And these are legitimate questions, right? But realize that it's still batting 1,000. Like it's still perfect. Like just perfect. It's never lost in California. Never lost. And that we have other states too. This is the other fun thing too. People like CPAs in other states will look this up, and someone is selling a business in Texas, and they're talking about this California notice, and we're like, what? And again, they're throwing stuff sometimes at the wall because they're moving really fast. Now, to the CPA's defense, these clients sometimes are putting it on the CPA's last minute. And like Pierce said, they're like almost saying, if you don't say yes to this, I'm not moving forward. And the CPA is going, I've never heard of it. They do a quick Google search and they're like, here's some red flags that, and they're trying to basically cover themselves, right? To say, you make a decision. I wouldn't do it. The common one is like, oh, I wouldn't do it. Now, here's the other side of it. This, instead of taking the approach of, I'm going to put all of my trust in my CPA who's never heard of this, like kind of like going to a general practitioner and saying, he does your blood test. And he's like, oh my gosh, you have a tumor in your brain. You got to take it out. And the general practitioner's going, well, I've never done that before. And the guy goes, no, you can only do that for me. If you don't do this for me, we're not getting that tumor removed. And the guy's going, man, I've never done that tumor before. Like maybe we can go find a guy. And he's like, no, only you can do this. Only you can say yes. And it's like, well, why don't we go find that professional together? And why don't we vet them together? And why don't we ask good questions together? And why don't you, Mr. Client, pay the CPA to do that? Bring up good questions. And that's the cool thing about the way we work. We work with everybody. We're like, hey, bring your CPA. We'll work on a conditional basis. If for whatever reason you guys don't move forward, you don't owe us a thing, but allow us the opportunity to set everything up, get it all properly prepared, review all of your options. And then if you want to execute, we get paid, right, at the close of escrow. So Rebecca, what are your thoughts on that?
You answered all my questions on that. Right on. I mean, having done real estate for over 20 years, I know what the exemptions are typically for that transfer tax of 3 1/3, and kind of crazy, but just wanted to double check.
Yeah. And these are good questions. So if you're watching this, you should look this up. You should ask us the questions, walk you through what it is. If you're actually selling investment property and you're concerned, well, then why don't we just close of escrow? Like if you actually really think like this is something that could affect your ability to defer the tax using the deferred sales trust, well, then why don't we just close of escrow? Oh, so I don't have to go to a qualified intermediary. No, we can close it at close of escrow, right? But more than that, why don't you talk to the qualified intermediary that we work with that's been doing it for 20 plus years, that we do business with all the time? Why don't you talk with our tax attorney? Why don't you talk with our clients? Why don't you look at the track record? Why don't you do all of the other things? By the way, bring in your CPA or the trusted advisor who has an objection, and let's all get in a room. Let's talk about it. And this is what I found. 99.9% of the time, they join us. They're thankful that we walked them through it. And those same CPAs who have that objection are bringing us more clients. And so if you want to learn more about this, again, you go to capitalgainstaxsolutions.com. We actually have a free ebook you can download, and it's like the 9 steps to closing the deferred sales trust. And it breaks down step by step, what you need to prepare for, the planning, working with us, what that looks like. That's capitalgainstaxsolutions.com. I want to see if Jake Miller has a great internet, because I'm sure he has some amazing insight to what we've been talking about. Let's give Jake a shot. Jake, how are we doing?
Doing very well. I think a lot of this is just helping people become comfortable with something new that perhaps they didn't know was around, and bringing in these specialists And oftentimes that works best when the specialists are able to talk to their current and local advisors, help everyone get on the same page. So in then the room, we have the client, we have their CPA, their advisor, their attorney, whoever, and they're all nodding their head, giving the client an additional level of comfort. Because even if they don't understand every little piece of it, the people that they know, like, and trust can achieve that level perhaps a little bit more quickly. And we can help them with this transaction, even if it's late in the game, like the 11th hour, so to speak. Now, of course, this last deal that you brought up in the very beginning, Brett, literally there were 5 days to try and accomplish something with a group of people who all needed to become educated. And I think that they liked the idea quite a bit, but needed more time. They just didn't have more time. It was a little bit of a stressful situation where family business was being split and sent into a lot of different directions. And had we come in and been introduced to them 2 months ago, it would have been a home run. Absolutely.
Yeah. Yeah. And so this is part of why we're here. So we're hoping you're watching us on YouTube, you're hearing us on a podcast, and you're thinking, I might be selling something in a year. Maybe I should start planning. And the answer is, yeah, you should. Right. And there's no cost and obligation to plan with us and to go through these scenarios with you. We're happy to do it. And which leads into, why someone may not want to do the deferred sales trust. So I'm going to throw it to Rebecca. Rebecca, what do you think some of the reasons someone may not want to do a deferred sales trust? Or maybe another way to put it, like, who qualifies for a deferred sales trust?
So who qualifies for a deferred sales trust? People selling their primary homes. If they don't, well, depends on what their plans are then in the future to what they want to do with the proceeds. People are selling investment property, selling any kind of highly appreciated assets. So it could be a business, cryptocurrency, that kind of thing. That's a little out of my.
There we go. That's great. Pierce, what's our minimums? What to make sense and why?
Me?
Pierce.
Sure.
Thank you.
Yeah. So the minimum is $1 million net proceeds and $1 million gain, or 2 $500,000 transactions. The reason is because there has to be enough pain there to go through the, the process, right? And it has to make sense and it has to pencil and there has to be a good return on the backside. If it's too little, it doesn't make sense for anybody and it's not a win-win-win all the way around.
Great answer. Jake, so we know who it qualifies for, right? By the way, it works for crypto, business sales, limited partnerships, LLCs, S Corps, C Corps, luxury primary homes, investment real estate, NFTs, artwork, collectibles, really anything that has $1 million gain, $1 million net proceeds. Jake, talk a little bit about just the lifetime audit defense and what that would mean for somebody, because the other part could be that the CPA could say yes and feel good, but man, the client and the CPA are concerned that if an audit does happen, that can be very expensive and they don't even know how to defend that particular audit because they've never defended it before. So talk about what's included with the DST.
I actually spoke with a client that owns a solar company in California yesterday who was very interested in the DST for 2023. He's looking to sell his business. And his CPA on the phone call asked that very question. Says, hey, I'm kind of like that general physician, and the people who are specialists in this DST are pretty much the brain surgeon. My insurance and my ability to protect the client, this is what the CPA said, is not that of the brain surgeon, in the sense that a lot of other professionals are extremely excited and happy that they can shift risk of something that they don't know in and out to the individuals who are the specialists and who do know it in and out and who do provide lifetime auto protection. Now, this is not an insurance policy. This is their legal firm, their law firm, signing a contract that for the life of the Deferred Sales Trust, the fees that you pay upfront will guarantee you representation from their firm for the life of your trust and the transactions of your trust.
At no additional charge, right? So yeah, that's the amazing part. So it's a one-time fee up front. But if it was $1 million of legal fees, probably never be that much. But imagine it was to defend you, state or federal, they will defend and they will do it at no charge to you and no charge to the trust. It's just completely covered lifetime audit protection, lifetime audit defense at no additional charge, which is huge, right? If you think about that, that's basically, to me, it's a big thing, because they're going, we're very confident not only in what we've done, how we've defended it, and how we've been able to close out these audits if and when they do come up. By the way, it's been over about 20, including federal and state, random audits, including promoter audits. It's all been no change, no findings, never on a dirty dozen, never on the IRS watch list. Like, it's still batting 1,000, right? You get to the plate and it hits a home run every time. Okay. So they're defending that, and they're standing behind their work, which is great as well. They're working on a conditional basis up front, as do we, to make sure that it actually is a good fit, and we can actually put it in place in time in case you do want to execute it. Jake, you want to add anything else to that?
Yes, I was just going to add that. I mean, they have extra incentive to make sure that you have a good outcome should you ever be audited. They currently have a 1,000 batting record, right? Or 100% track record with the IRS. And they wouldn't want just any Joe attorney to try and get up to speed to represent you, because some insurance policy is paying for that. They have additional incentive, whether your case is big or small, for them to step in and pay premiums, that fees or expenses that you paid in the beginning, they don't have an issue expending more than that and representing you to keep this as an ironclad strategy, because that is rare in the industry. That is rare in the industry, and for them to be able to maintain that, that's prestige and that's powerful, and they're maintaining the integrity of their strategy across all clients by ensuring that not one of them loses the power of the strategy.
Perfect. So we covered the content there, right? So that was pretty heavy. That's pretty deep there. Now I want to get some practical application. We'll talk about a deal story, maybe two. We've got a number this month. But before we go there, remember the 3 C's and T's. This is the action you can start taking right now, whether you are the client, potential investor, entrepreneur, business owner, primary homeowner that's listening to this and has the multi-million-dollar gain and is considering your different options. The first thing you want to do for the first C, stands for capital, and T stands for tax, is you've got to shift your mindset to a capital and tax flow mindset. It's a capital and tax flow mindset. And what do I mean by that? What I mean is that you got to look at your capital gain and your wealth and kind of your cash flow plan. That's the capital part, right? And how that's working for you and what that means for you and your family, and what that means for your next business venture, and what that means for you personally, your personal budget, all of these things. That's the capital mindset, right? The wealth mindset, if you will. And then there's the tax, and this is the tax flow mindset. And it's essentially connecting these two, or trying to get them to line up as best as you can, right? And let's imagine you have a Rubik's Cube as your situation, and all of ours have some different colors on some different ends. And our goal might be to get one side as congruent as we can. And that could be with some of the freedoms that we're looking to accomplish. And all of us are searching for certain freedoms. And that could be retirement freedom. It could be entrepreneurial freedom. That could be the freedom from the 1031 exchange, freedom from estate tax, location freedom. It could be a partnership separation freedom. It could be just diversification, liquidity freedom, or debt freedom. These are all these different freedoms. And the question is, which of these freedoms or multiple freedoms is going to help you to get to as congruent as you can for your life and your wealth plan? And that's by taking a capital and tax flow mindset, because guess what? Tax is the big barrier. In fact, it's typically the number one reason people are not selling, because it's 25 to 50% of their gain is going to be wiped out by the tax. So most people just say, A, I'm not going to sell. B, I'm only going to sell if I can get that 1031 perfectly lined up. C, I'm not going to move out of the house because I don't even have a 1031 option. I'm just going to die and get a stepped up basis, maybe rent it out for a couple of years and then maybe do a 1031. 4, I might have to give it all away to charity. And so all of these things create situations where people are not taking action because they're not unlocking and solving their problem with a solution or having a team to help them solve the problem. That's what we want to do. So we want to have a capital and tax flow mindset. What actions are you going to take? Or what actions could you take, and how does that help you to get to where you're trying to go? So that's number 1. Number 2 is a capital and tax pro DST dream team or machine, right? This is the actual product or actual strategy is going to help you get there. By the way, it could be a DST team. It could be an opportunity zone team. It could be a charitable team. It could be a 1031 team, like whatever that is. Make sure you have a dream team and you have that strategy, and that everyone understands that that strategy is going to help you accomplish 1, 2, and 3, and 4, and help you to avoid the pain of 1, 2, 3, and 4. Right. And it's narrowing in on that and knowing what that it can actually do for you. With the Deferred Sales Trust, we can do a number of things that are incredible. And in fact, it's part of how I help people understand that this Deferred Sales Trust is an investment and not an expense. Most people get maybe a little bit concerned because they feel like the fees are high, and the fees are substantial, but you're getting a high level of expertise and execution. But the trust is able to unlock so many neat things, like new depreciation schedules, like optimal timing, like diversification, like eliminating estate tax, like having the funds to be an entrepreneur with you, to go buy a business or start a business. You be the entrepreneur, and the trust is a silent joint venture partner. So all these little things add up to go, oh my gosh, this is an investment, not an expense, versus just the first ROI, which is typically just, oh, I'm deferring X amount of tax and I'm getting X amount of return. That's just ROI number one. So I want to make sure you understand what the machine does and how it can actually help you achieve those things. And the last thing is the last C&T is capital and tax flow multipliers, which has to do with the investments, because it's just as important that the tax strategy works for you to achieve what you want to achieve. But if the investments aren't performing, then guess what? It doesn't really matter, because you're going to be losing on that. And now you might as well have paid your tax. So you want to make sure you understand you have a team to help you execute the actual way to multiply the value of the trust. And that's through amazing financial advisors like Jake Miller. That's through amazing, if I have to toot my own horn as a commercial real estate expert, like having a commercial real estate expert on your team, help you to do that. And then that's through the tax attorneys, that we work with. And so as we work together, and by the way, a lot of our entrepreneurs, they already know how to make money and do business. That's great. We're like a part of your team. And that's why you can joint venture with the trust to go do your own deals. And you can multiply that and have another promissory note. So these are all the things that if you spend enough time with us, we have. And by the way, you can go to experttaxsecrets.com. We have our coaching program that's opening it for business professionals. It's going to be live here in about 30 days. And we're really excited. We have all kinds of new content organized where you can go step by step and you can become a deferred sales trust really ninja is our goal there, right? But also capital gains tax solutions ninja, where you have different comparisons. And essentially we're going to create this educational content and material that you can always come back to in an organized way to get the fundamentals, because like anything, you got to study this and you have to practice it, right? Study it and practice it. So that being said, Jake, any thoughts on the 3 C's and T's? And hey, Leah, welcome.
Brett, I think it's incredibly important that people understand the parts and pieces of what affects them the most. That's how we're going to optimize their current financial situation. I always comment on the two sides of the coin. You've got your rate of return and you've got your taxes. And we have to look at both, because you can have the biggest rate of return, but if you're paying the largest amount of taxes, your net is less. A lot of times people aren't looking at their net. They might just see that the big number here and forget about the big tax number they have to pay. And so if they can optimize the two of those, they're going to have a much better Christmas, if you know what I mean.
Absolutely. That's great. So what questions? We're going to open up for questions here. For anyone who has a live deal, questions or comments, thoughts, you can put it in the chat. You can unmute yourself, whatever you'd like to do. Jake, myself, Pierce, maybe call Rebecca on this one, maybe. All right, pitch hit for Rebecca. Anybody have thoughts or questions or comments? Feel free to unmute.
Brett, do you have a recent deal story that you're going through? I know you said you have 6 or so closing this month. I'd love to hear another.
Absolutely.
Example.
Let's start with the one in Georgia. So this is a $17 million land deal, and it's taken about 2 years. Okay, so they had to wait for all kinds of stuff, right? For city stuff, for tenant stuff, for leasing. And it was 2 brothers. And in fact, the first brother found us and went through the process and brought his other brother in. The first brother ended up not using the Deferred Sales Trust, right? I think for him, it was just a little bit too complex for him, to be honest. I don't know. I have to call him again and really find out for sure why he said no. But the other brother was like, great, let's do it. Right. And we closed. So, but it was extensive due diligence and very thoughtful questions and CPAs and tax professionals. And then it was just waiting for all of the deal to actually happen, where these land deals. And so it was a big land sale. They had a big grocery anchor tenant that was going to come in and it's going to build. And it was a large deal, Georgia, so East Coast. And they closed. Some of the things that he wants to invest in are real estate, but also he's probably taking a 50-50 approach where it's stock market 50%, 50% real estate. And he's excited. He's ready to retire. This project for him meant, for the freedoms for him, it meant, some partnership freedom, because he and his brother were working together, and that was fine. There's nothing wrong there. They were working together and they were just ready to kind of go their separate ways. And also, number two, they're looking to harvest all of this land. I mean, land is like one of the most, you have to be really patient to own land, because land can take a long time to actually get the return. So this was a kind of a preservation and diversification of land that's been developed over many years. And it was some actual cash flow now, right? Because this land was just vacant land. So they're taking, real estate rich, cash flow poor on the actual land, and they're converting it into a passive cash flow. Now he might go active, but I think he's probably going to relax for a while. And that's actually what a lot of our clients do for maybe the first 6-12 months. They're just like, this is cool. If I can actually you guys can go get a decent return for me, and I can just collect cash flow per month. Hey, I'm happy, right? That's a great thing. So that's the Georgia deal story. And I'm going to see if I can get him on the podcast. That was one that we just closed. Any thoughts on that, Rebecca?
No, that sounds incredible, and definitely land, whatever it is, takes a while to sell usually. So.
Mm-hmm. Yeah. What are the questions from Rebecca? Pierce, Leah. Who else do we have on I think we had Eddie on there before.
I'm always one to speak up. I just had to come back on here. I haven't been on here for a few months, and I wanted to just get my Deferred Sales Trust refresher and just kind of see the gang here again. So glad to be back.
Good to see you, Leah. It has been a while, and I did see you at the planning event, and I had to run out. I'm like, there's Leah. I'm like, but I had to run out to another meeting. It's like, I have no time. So sorry I missed you in person at the EXP event. That was awesome. Very cool. All right. Who else? Questions, thoughts for Jake or I, or even Pierce? And by the way, next week, I think we'll dive into the other 7 deals that have closed. I got to organize my thoughts on every one of the deals, or I can just tease you guys with one deal story a week. I have some cool ones though. Some cool ones. Jake and I have some cool ones. So it's been fun, and it's been a crazy month. So I'll save those ones for next time. So if you guys want to take action, you can go to capitalgainstaxsolutions.com if you're watching this. By the way, check out the new book. It is really actually coming out in 30 days this time. I've been saying 30 days for a while, but they say the best way to market books is just to keep marketing the books until it's coming out. It's but no, it really is. We were finally finalizing the final script, or the final transcript. So look for that. It's called Building a Tax for Exit Strategy. Although there's a slight change. We might change it to Building a Capital Gains Tax Exit Plan. By the way, let's take a little poll here real fast. Rebecca, Pierce, Leah, what do you think? Building a tax for exit strategy or building a capital gains tax exit plan?
I like the first one better. It's shorter.
Pierce?
I agree. I think you can get a little bit more broad. There's a little bit more you can do with it instead of just capital gains, because you guys deal with the state tax too, which is a huge issue.
That's a good point. Okay, good. Leah, feedback?
Less is more. So I like the first one better.
Okay. All right. Jake, if you're still there, I'd love your opinion too. I don't know if you're still there, but all right. Yeah. I just thought maybe, so my feedback, or at least why I'm thinking this, I had to change it, because when I hear tax, to me, that's so broad, right? It's talking about my income tax, talking about sales tax, talking about property tax, talking about capital gains tax. So I feel
yeah.
It's your book.
I know. But it's for the people, man. It's for you guys and gals. Come on. So I don't know for sure. So I'm just thinking about that. But what are your feedbacks on that? So you don't think, I know, because you guys are, you're hanging with me, right? We're doing this thing. So when you hear tax, like, oh yeah, it's capital gains tax or it's estate tax, like, right. But think about someone else, like if they're searching, they might think like I'm a CPA just doing income tax returns. You see what I'm saying? Maybe.
I feel like I'm a novice here, or novice. What is it? Novice.
Sure.
Anyways, a beginner. I think that for me, that seems like it's most explanatory to the simple-minded newbie that comes on the scene to understand that.
Pierce.
I mean, yeah, the benefit of the other side is you get, your brand in there. Right. Like, but again, it's, I don't know. You might get more value out of is there more than just capital gains tax solution in there? Is there estate tax and is there any other income tax?
There's some estate tax. Yeah. And the DST has that nuance of the net income tax advantage, right? If you move, so there's, but still it's all centered around deferring the capital gains tax, right? Or eliminating the estate tax. So
essence of the book.
Yeah.
Yeah.
I think,
definitely.
Yeah. I think you need to, can you hear me?
Yes.
I think you need to maybe revisit tweaking the long version to make it shorter.
Mhm.
If you want, I get where you're coming from, that you want the capital gains tax in there.
Mhm.
And if you can rearrange it, hopefully you have maybe an editor or somebody that can work with you on coming up with multiple different options for the title.
Right.
But yeah, then I think you might want to throw around a couple of different titles.
The Capital Gains Tax Solutions book.
Not quite that one, but yeah.
I know, because Capital Gains Tax Solutions is so long, but it is also so precise. Pierce, what do you think?
What's the title right now?
It's called Building a Tax Deferred Exit Strategy.
How come you can't just do capital gains tax solution? How come you can't do that?
Yeah, it's just
That's
Capital
your
Gains
brand.
Tax Solutions. Yeah, and that's,
That's your
I
brand.
like the building the story brand. I guess, I don't know if you know Donald Miller. He did that. It's an amazing book. If you haven't read it, read it. So I'm thinking it's yeah. So anyway, just think about it. I don't need an answer today. We'll come back next week. We'll hang out. Chew on that for me if you could. And so thanks everybody. Rebecca, people want to get in touch with you. Where can they find you?
They can find me at RebeccaMunson.com or RebeccaMunson.com website. Yep. Probably easiest. Yep.
Truckee Tahoe luxury realtor up there. Amazing. Pierce, go.
Pierce at kingdomluxuryrealty.com is my email address. You can find me at kingdomluxuryrealty.com as well.
And the YouTube channel, right?
And the YouTube channel.
Cool. Yep. Leo, how about people want to connect with you? What's up?
I do residential in the Sacramento area. I go from all throughout Northern California. If you need any residential services, I'm here for all your real estate needs. And you can find me at Leah Momentum on Instagram.
Excellent. Looks like we lost Jake. So Jake's at strategictaxsolutions.com. And then, of course, just if you go to capitalgainstaxsolutions.com, you can also just say, hey, we saw all you guys on the masterclass. So, or mastermind, however you want to call it. So that being said, thank you everyone for watching. We so appreciate you out there. Please invite someone next week. If you want to attend this, you can also sign up by going to capitalgainstaxsolutions.com. You can be a part of our community here. Okay. So thank you so much. We appreciate everyone. Talk to you soon. Bye now.
Yep.